Hello, my name is Brenda Hayward. This video is called Homeowners Tax Deductions for Homeowners. Homeowners tax deduction season is almost over. However, it comes back every year. Remember, you have only a few tax deductions for homeowners that could decrease what you owe yearly to the tax collector. This video will mention deductibles to consider. This video will include 1. Homeowners. Should you use standard or itemized deductions? 2. Homeowners. List of non-deductible home expenses. 3. Homeowners mortgage interest is deductible. And 4. Homeowners home equity loan interest is deductible. Number 1. Homeowners should use standard or itemized deduction. Homeowners, your first decision is to consider if the standard or itemized deduction fit best for you at this time. Both types lower your taxable income owed to the IRS. The Internal Revenue Service makes the standard deduction available to all tax filers. In 2023, the standard deduction breaks down like this. If you're single, the standard deduction of $12,950. If you are married, filing jointly, $25,000. If your head of household is $19,004. If you're over the age of 65, filing single, or married, filing separate, you get a standard $14,700. If you are over 65, filing married, filing jointly, the standard is $25,009. With the standard deduction, you can utilize the numbers required by the IRS for standard deduction amounts. With the itemized deduction, including any tax breaks you may qualify for, homeowners. This happens when the total itemized amount is larger than the standard deduction required by the IRS. If the itemized is lower, it makes it better financial sense to utilize the standardized deduction to keep the totals of what's owed as low as possible. Number 2, homeowners. List of non-deductible home expenses. Homeowners, there are a few yearly bills that are paid to support the home that you feel each money out of your budget. However, that money is not taxable per the IRS. Some of the bills paid yearly that are not taxable depends on the city or state you live in. They include fire insurance, homeowners insurance premiums, the principal amount of the mortgage payment, depreciation, the cost of the utilities, including gas, electricity, and water, and the down payment made to purchase the home. Homeowner, please take the time and make a list of questions you have and present them to your tax professional. Number 3, homeowners, mortgage interest is deductible. Homeowners, if you are still making those monthly payments, don't forget to wait for paperwork from the lender on the amount paid for the interest that year. Home mortgage interest is allowed for up to the first $750,000 and $375,000 for each party if married, filing separately for the debt owed. Number 4, homeowners, home equity loan interest is deductible. A home equity loan is a second mortgage on your home. The home equity loan allows the owners to access the equity they have built up as collateral to borrow funds. This is similar to a regular mortgage. However, you can deduct the interest you have paid on the home equity loans and home equity lines of credit only if the funds were used for home improvements. This is a little About me, I'm a person who enjoys food. However, cherry cheesecake is one of my favorites. Just to let you know, I am not a real estate agent, accountant, lawyer, investor, or loan officer. Please let me know if you like this video by clicking on a thumbs up, subscribing, or leaving comments below. Homeowners, I hope you are gathering all of the paperwork required for your tax professional. The rest of this video includes 5 homeowners discount points are deductible, 6 homeowners property taxes are deductible, 7 homeowners home improvements are deductible, 8 homeowners home office expenses are deductible, and 9 homeowners private mortgage insurance is deductible. Number 5, homeowners discount points are deductible. When you take out a mortgage, you may have been offered an option to buy down some discount points to lower your interest rate on your current loan. For example, you may have been given an option of 1 discount point, which is equivalent to 1% of the mortgage amount. This is a deduction. However, the origination points are not taxable because they are fees and do not affect the interest rate on the loan. Number 6, homeowners property taxes are deductible. Homeowners, depending on where you live, and the property taxes are issued by the state and local levels, you may deduct up to $10,000 and $5,000 if married filing separately. Depending on where you live, this deduction can be valuable. Number 7, homeowners improvements are deductible. However, homeowners, not all home improvements can qualify for a tax deduction. Most home improvements are not tax deductible. Most tax deductible improvements include home energy efficient improvements, installing improvements related to medical care, and capital improvements that are permanent. Number 8, homeowners, home office expenses are deductible. Homeowners, if you operate a business in your home, you can deduct some of the expenses of maintaining that space. For this deduction, IRS requires that you use your home office regularly, and for only businesses to qualify for this deduction. If this space is used for other things, it will not qualify. There are 3 rules to remember. 1, the size of the deduction should refer back to the percentage of the dedicated space used for the business. 2, you also must be self-employed. And 3, the total deduction expenses cannot exceed the income from the business for which the deductions are taken. Number 9, homeowners, private mortgage insurance is deductible. Homeowners, if you did not pay down at least 20% of the mortgage loan, you are paying a private mortgage insurance. Until you reach that point, if you have been in your home and believe that you have paid at least 20%, check back with your lender to see if you are no longer paying and getting the funds deducted from your monthly payments. If you are under the 20%, ask for the payment amount paid to add to your itemized tax return. Lastly, remember, being a homeowner have a few financial benefits. Information is power, and it is important to approach tax season as a homeowner by maximizing the value of your home. You do not want to leave tax deductions on the table. Please compare your itemized tax deduction to the standard deduction before deciding which option is best way to file your tax return. Please let me know if you like this video by clicking on the thumbs up, subscribing, and leaving comments below. My name is Brenda Hayward, and thanks for your time.